Hi, everyone. What a great day we're going to have today with Greg Horvat coming from behind the curtain. The Wizard of Waves, not the Wizard of Oz. The Wizard of Waves coming out from behind the curtain. Got to stick around for that. Want to start off with bragging about the team. You know, Blake was not getting long euro all the way down. Blake and Paula yesterday called it during face. We've had a nice pop in the market. I'm going to talk a little bit about the wand, but great scalp, 60, 70 pips from where they talked about it yesterday. Okay. One thing about the dollar, and we have a little bit of a reversal week going on here, but I'm not sure we're done. If this is going to be it for the top, we could still make a move to new highs. Right now, we're back at, what was major resistance between here and 98.40. And since the name of our community is face, let's try this. Hi, everybody. We never show our face in face. I thought I'd show our face. My trading warrior brothers and sisters. How's everyone doing? Okay, that's it. All right, so I want to talk a little bit about the wand because, this is risk on, risk off. So we're getting a nice pop in the S&Ps. To me, it looks like 1, 2. And I remember before Steve went on his 50th vacation, I asked him about some upside targets in the wand. I think he had 717, but then the next target was 723. So there still could be another push up, especially if this dollar pullback terminates early. Interesting that the yen is not selling off with dollar weakness. Still needs, look at the confluence of this moving average here on the 4-hour and kind of a horizontal line that, some people might say we're setting up some type of triangle or some type of head and shoulders. But, it isn't one until we come out over 107. 107 ought to generate a move back up towards 109.5. And I do want to brag, look at this. So Blake, faded the dollar, doing even better in Kiwi. Andre had a harmonic, so there's a confluence that we had between different, harmonic pattern and basic technical. And Stel, a little heat on the NOK, but doing real well on Euro Pound. So let's go to Euro Pound. I was going to bring that up before I pass it to Blake. Yesterday was a real nice shorting opportunity. I didn't believe we bottomed. I still don't believe we bottomed. We start taking out 90.10. When you look at it, just a simple measured move from here to here could take us back down towards 88. Actually, 300 from 90 is going to take you towards the 87, 78.65. But 88.5 is a target. We had a lot of stuff here at 89.20. So we're on the verge of breaking down of call it a descending triangle. And that's one thing. When I'm bearish a dollar, I'd rather have it happening when this is going on. Yeah? Hello? Anyway, I'd rather have it when Euro Pound is, when the Euro is stronger than cable. Doesn't always work, but I prefer to play the short side of the dollar when Euro is stronger than the pound, not the way it is right here and Euro Pound continuing to go down. So I really think when we have a true bull market, you're going to see Euro Pound after we pull back in here, rally to new highs. Talked about 94 for a long time. Maybe it's a third drive, but I saw Greg's long-term count before we accelerated up here. And I think it was 114. So yesterday I tried the oil. I just day traded it. So I've left about 60 pips on the table. And I just want to let you know, a lot of bears in here, and I still believe that, there's still a possibility of us breaking down, but it held up so well during the risk off move that we had yesterday on Monday when we were closed, that I'm starting to think that if we clear this moving average right around 56, that we might get a breakout here and rally back to above this high to 61. So, it's hard for me to get bearish because right now it looks like this could have been the first part of it with some type of corrective move. We cleaned out the stops under 53 yesterday, going to, classic stop hunt by 13 points. And here we are back above it. So I'm leaning a little bit more towards the long side, although when you look at the chart and you're completely objective, this is completely neutral with a bias to the downside. I broke your screen. Okay. Is it 83? Let's see, Ben. Ben's on top of it. So let's see what Stell's looking for. Yeah, 83. Pretty aggressive, but you know what? I don't fade Stelios' long-term work at your own peril. So we have a nice guest today. Raksha is going to be here, and I respect her technical work. She's going to be our guest today, and it's my pleasure to hand it off to General Blake Morrow, commander of ForexAnalytix, of the biggest ragtag army in the FX universe. So, hi, Commander.
Hey, good morning, Coach. How you doing?
Good.
Yeah, I noticed you have some pretty nice teeth smile going on there.
Oh, yeah, but it's like I told the team, I said, Blake, the cancer surgeon 5 years ago saved my life. My oral surgeon is letting me live it again. So
that's awesome.
Yeah, really. So it's the best of times and the worst of times.
Yeah, I'll tell you, I'm one of those people that I was blessed with not having an opportunity or not having to wear like braces growing up. My teeth were fairly straight, which is good, and I've kind of avoided a lot of oral issues to this point. Knock on wood. Good. But my friends that have not, it's painful. I have a friend that was over this weekend. He's got 9 months of oral surgery going on.
Yeah.
And he's in the month 1. So,
yeah. I got it all done in 6-7 hours on the chair.
Oh my goodness.
Yeah. Anyway, your friend, whatever's going on, it's tough to be out in public when you don't have a good smile. Yeah. And it can affect you professionally and emotionally. So these dentists, your natural things that we're born with are always better, but this is very close to the biting power is amazing and everything. So anyway, I'm very happy that and fortunate I was able to put a deal together. So
awesome. Well, congratulations.
Yeah. All right. So, and congratulations to you on bottom picking the euro yesterday, bro.
Thank you. It was actually a very good overnight session for me. I was long. I'm still long some euro dollar. I took some off the table here at 110.17. So like right where we're at. I'm long some Kiwi, and I was waiting for the breakout above this resistance, and I've exited some. Now I'm trying to buy some on a little bit of a dip. I do think that that the dollar near term has shown its hand up here at this resistance. How much downside do we have in the dollar? I think a lot of it really has to do with more of the cable, and the cable has shown a really big reversal here, guys. And you've heard me say this, and you'll hear me say this all the time, and you'll hear me say this from those of you that have listened to me 10 years ago on the Morning Edge webinars. used to hear me say, false breakdown usually leads to a breakout, or a false breakout leads to a breakdown. I'm pretty confident right now the pound's going to break higher. Is it going to do it today? I don't know. I mean, there's a lot of news surrounding Brexit, and I'm sure Stelios can get us up to speed here in just a few minutes. But the pound looks extremely constructive, and the false break below the 120 level leads me to believe that we are going to break higher. That's good news if you're short the euro pound, which you were just discussing, Coach. It's good news if you're long the cable. And also, if you look at it longer term, we could really forge a big double bottom. And that's very bullish if for some reason we get back above 140. If you think about that, I want you to think really quick. Let's talk. We have a deal, Brexit deal. And is it possible that the pound in time gets back to 170? Technically, based on what I'm seeing, it is very possible. So, especially if we can hold here. Now, that doesn't mean you should be long the pound right now and, go long and close your eyes. But I do think risk reward wise, I mean, you're basically, if you want to just, if you want to think longer term like that, and you think that the things are going to turn around, and you're always as optimistic as Stelios is, then you get long, and you risk below 119, and we're at 122, so you're risking 300 pips to make what?
Yeah.
Yeah.
Well, I would say that would be the most unexpected event in the FX world for 2019 and 2020, a 160 pound, which is, wise, viable.
Well, I don't know if it's unexpected. I think if people probably
Stelios.
People probably look at this and say, it really just all depends on, what kind of deal there is, if there is a deal. And if there is a deal, could the pound recover, to 160, 170? And I'm not talking this year. I'm talking over the next 12 months. Can we trade back up there? It is possible. I think there's a lot of pent up demand in the UK. A lot of people are hesitant to be involved in the UK businesses, multinationals, a lot of lack of investment in the UK right now based on the uncertainty that's surrounding it. If we can get through Brexit and there is some sort of deal as far as trade and immigration and the border issues, and it all gets resolved, there's going to be a huge influx of money coming into the UK. There's going to be a huge influx of consumer spending. I would assume UK GDP might be the standout economy for the next 12 months. Believe it or not. So
I agree. And think about also how many people are short and have been very, very short.
Oh God. Yeah. Yeah. I mean, the cable could rip uncontrollably. And like I said, obviously you have to be an optimist in this situation to think this way. But if you really believe that we can get through this with some sort of deal, the pound's a screaming buy here. On the flip side, if the UK leaves Europe without a deal, the pound's going to be trading down at probably close to parity, 110, 105, it'd probably be close to parity with the euro. I think that's realistic too. So, but it depends how you're looking at the glass. Is it half full or half empty? From a risk reward standpoint, it is, I think, worth a shot down here if we can get above. See this pink breakdown point here, that comes in at 123.75. It's 150 pips away from here. It gets up there. I probably will take a substantial long with the cable and risk 50 grand to make 300. That's probably the kind of trade I'm going to take, and I'd be willing to do so. One of the things that I've been doing this year is trying to pull profits and sit on a nice chunk of profit so I can risk some in the event that things do work out, and because I'm willing to take a shot on the cable, on a long, on a situation like that. But I have to see it first. It's not, I can't, like right now I did and I will continue to play the pound, just little tidbits here and there, and try to take some cash when I see it. But all in all, I have to let the charts do the work for me. And right now, that, like I said, that false breakdown probably will lead to a breakout. Probably is not good enough in my book to take a big, to take a position and, just close my eyes and hope for the best. I need, in my opinion, for me, I need to be really confident about that. And right now, I'm not. I do think if we get above 123, 123, 20, then the next step is 123.70, and above that, then I've got the green light to really start being more aggressive. But I think that's the risk. So if you're looking at the dollar and you go, well, how far is the dollar going to pull back? Well, I think a lot of that has to do with how bullish the cable can get, because if the cable turns bullish, the dollar index is going to get donkey punched. Wait, did I just say that? I didn't mean to say that. It'll get holy cow, I didn't believe I just said that. Thank goodness no one knows what that means. Anyway, so is anybody here laughing? Oh man, I'm so bad. Okay, so here's the euro. The euro has made it back to 110.30. It's this is going to be key resistance. A break above that, we'll test 111. I think a 111 is going to be key. That's what I'm looking for initially in the euro dollar. But frankly, if you look at where's our patterns in play? You look at the patterns in play. I have a target of 111, but that can be adjusted. Above 111, we're talking maybe 112. 112, and then once you get to that resistance, it'll be I'm sorry.
You read the comment, eh? I'm a currency trader and I hate trading the.
Yeah, I'm sorry. I didn't mean that. That's just stuff just slips out sometimes. You guys know it's 5 a.m. here. I've been up since like 3:30, so it's or 3:15 or something. So sometimes stuff just kind of slips out. Anyway, good morning, Steve. How you doing?
Good morning, Blake. I'm good. How have you been?
Yeah, maybe we should save me from myself. Stelios, so what happened in the UK overnight?
Good morning.
I think until Brexit gets resolved, we should have a special daily webinar about Brexit absurdities.
Yeah, we could do that. So,
yes,
what's
yesterday,
happening?
Boris Johnson lost his majority,
Yes.
and we are. Hold on a second, because my kids are a bit loud. Okay.
Isn't that the beauty of technology today?
Yeah.
Think about your days. Think about your days at the bank.
Yeah.
I mean, I had bring kids to work days every once in a while, which was like once every 2 or 3 years. But working from home for the last 8 years has been, boy, what a joy.
It's a blessing. It
really is. And anyway, sorry, I didn't mean to interrupt.
No worries. So basically today we have a very, very interesting and important vote, which is once again to try and take no deal Brexit off the table. Now, is this a good thing or a bad thing? It's very debatable. It's the pound certainly likes it because we've said before, a no deal Brexit is a negative event for the pound, no doubt about it. On the other hand, if you take away your main weapon of negotiating, what kind of negotiations can you do? But the pound likes it, and from what it looks like, there is a very decent chance that this bill, which is going to be put forward today, I think in a couple of hours or so, that it's going to get passed. There's a good chance of that. So if that happens, then we get some major news regarding Brexit, which is long overdue, because then that will mean that the no-deal Brexit will be taken off the table. So very interesting day today, and very important, I think. And I think that's behind the rally in the pound. And I have to reiterate to all our friends and who are watching and all that, I do believe that there will be some kind of a deal. Actually, I do believe there will not be a no-deal Brexit. I've said this from the beginning. I think there's too much money at stake. And I think that in the end, some kind of compromise, good compromise, bad compromise, I don't know and I don't care, it's going to be reached. So that's why my long-term target for euro sterling is at 83. And also, it's not only because I think a no-deal Brexit will be avoided. I also think that the euro is going to have a very tough, say, 12 months ahead. So that's what we're looking for.
It's tough for Europe to negotiate hard when they know that their economy is already really slowing.
Yes.
Minus Greece, of course, because I think some of your PMIs are above 55 right now. Minus Greece.
Greece is going to be the spectacle of the next session. Trust me on that.
It's going to lead Europe out of the funk.
No, it's not. Of course, it doesn't have the size. But
Stel, what you just said reminded me of an exam that I had to take in college, and the question was, what's worse, ignorance or apathy? And I answered, I wrote, I don't know and I don't care.
Nice.
Got an A. How about
nice. Nice. So that's my view. Actually, that's a very good one. Actually, I have to also mention, like Christine Lagarde was speaking today. She's still well, she's not actually, from what I've been, as far as I'm aware, she's not actually firmly going to be the new ECB chair, but I think she's probably going to be the one, odds on.
This is not confirmed for sure, because it wasn't even like 5 days ago that I was reading an article on Financial Times about the pros and cons of possible candidates.
Yeah, but I think we can all assume that she's going to be the one.
I agree with you.
Yeah.
And she was talking today, and she did say that she said before that the ECB has not reached the lower bound in rates, so that means we're going to go into negative rates. That's pretty much a given, and deep in negative rates.
Who isn't? Who isn't?
Yeah, good.
Okay.
Good question. And she also said today that she will act with agility to fight the prolonged low inflation problem in the Eurozone. So we used to have Trichet with vigilance. Now we have Lagarde with agility. Every chair has to have his own or her own little word, don't they? But I think she to me, she sounded dovish. To others, I read from other people's comments that they thought she was neutral. I think she was a little bit dovish. So let's see what happens when she takes over.
All right. Well, we appreciate the updates, and I think the euro. I mean, like I said, everybody, this is going to be a race to zero at this stage in the game. But I have to default back over to Brexit. What's good for the UK is going to be good for Europe. So, I do agree with you that Europe is slowing down to a point where they have to. I think it's going to be in their best interest to make some sort of deal with the UK, good or bad, or whatever. It's going to be something because that's going to keep Europe from teetering over the edge as well. Because sending the UK out the door without some sort of deal is not only going to be bad for the UK economy, but it's probably going to hinder the European economy. And I don't know if they're willing to take that risk at this point.
Ours too, Blake.
Well, they have.
Don't you think?
They don't. Yes, but they don't care about us. Probably about as much as as our administration cares about anybody else. So,
that's true.
You know what I mean. So, with that being said, I think they're probably more worried about how it's going to affect the European economy, and therefore, I think the risks are really tilted to seeing an upward move in the euro and the cable at this point. Now,
well, that's the prettiest falling wedge I've seen in a long time, Blake. And the implications are bullish.
They are. If we can, if the euro eventually breaks 112, I mean, we're talking move to, you know, the teens. And I don't want to be that optimistic.
Nostramaro. You don't.
No, I'm not here to try to figure that out. But
then you can say I called it.
Yeah. No, it's not. That's not important to me. I don't care about calling. I care more about trading it.
Call me anytime, bro.
Hey, you know, really, you know, there's a lot of euro bears out there, rightfully so too. And I don't think that, you know, for those of you that are super bearish to the euro, I don't think you're off base at all. But that doesn't mean that the euro has to respond that way. I think that you could also believe that the euro could do this for the next you know, few months. Let's hope not, but you know, we could obviously still do that. I just since it is a descending wedge, technically I have to play it on the long side when you're down at the bottom ends of these wedges, and you know, obviously a breakout I get long, but you know, I'm a seller as we approach 112. If that makes any of you guys that are bears feel any better. You know, if we get up to 112, we look like we're going to fail. I'll take a tight risk reward short down or up there. So, you know, just some thoughts. One of the other things that I want to point out really quick is, you know, obviously the Aussie looks really damn bullish, and I should be playing it long right now, but you know, if you heard me the last couple of weeks on the week ahead video, I've pointed out that the Aussie should be a lot lower. It's not. And, you know, it should be theoretically a lot lower, and it's not. And now we're getting to a point where you've hit a fever pitch with some of the shorts that are like, you know what, screw it. I don't want to be short anymore. This Aussie should be, you know, 5 cents lower, and it's not. And so now you're starting to get the Aussie rallying. Did you see the GDP data last night? GDP out of Australia was at 0.5%, but that was like the lowest, you know, some of the lowest levels that we've seen, you know, over time. And the Aussie is just still rallying. RBA was dovish, still rallying. And you know, the Kiwi, we're breaking a downtrend line here. And look at the S&P. The S&P, remember, yesterday I said that what I've observed over the last, you know, so many odd years, if you're bearish equities, why don't you wait till about mid-month? You know, mid-month, about September, mid-month is when you start to see equities sell off. You always get people trying to play it, you know, post-summer, trying to play on the long side. People are reallocating, getting back in. And, you know, I do think that the S&P is going to fail up here, but I think it's going to be closer to 3,000.
How about it ramps into the Fed? And
well, it
could ramp. Points. That's mid-month.
It could. You know, we could get a no-deal Brexit, and we'll be trading at all-time highs. So yeah. you take a no-deal Brexit off the table, and we know we're going to get some sort of deal in the UK. I mean, there's a risk that the S&P could be trading at new highs by fall. So, where we are in fall, but
that'd be the third drive if that happens.
Up there. Yeah, look, 1, 2, 3. Yeah. I mean, you know, it's possible. You know, and I don't want to rule that out. I think that people that are bearish stocks right now have to be a little careful. I do think that you know, we're holding up pretty well, and I think the risks are, you know, tilted to a continued rally here. So anyway, just some thoughts going into this week. I know we have Grega coming in today, so I'm going to pass it over to Steve and Stelios and you, Coach. And I want to thank
you. Want to stick around like it's in 40 seconds for the trade balance?
Not really, but yeah, okay. I can.
No, you're free to go. Like, I'll take care of Steve.
Yeah, go scalp.
Okay, all right, guys.
Go scalp, bro.
Have a good one.
All right, good luck.
Thank you. Bye-bye, bro.
So we have some Canadian data. We actually have the interest rate decision in an hour and a half, so we have to remember that.
Yeah, let's see. We have 40 seconds.
And trade balance out of the US as well. So, you know.
Let's see.
Adam Button said yesterday, I asked him, when will the BOC relent and join the global central bank parade of easier rates. They're one of the only countries that haven't had an ease for a long time. So
which one?
maybe
Coach?
it's today.
Oh, there we go.
Bank of Canada.
54 billion.
Yeah.
A little bit worse than expected. US trade balance, Canadian trade balance, also
Worse.
expected. Yeah.
Okay.
But I'm not expecting these to move the needle. Go ahead, Coach. Say again.
Well, when Adam was on, he lives up there, and I said, when is the Bank of Canada going to join the other global central banks in ease, because they've been resistant to doing it, and he thinks it's possible that very soon, maybe it'll be today.
Yeah, although we have to admit that in general, so far so good for the Canadian dollar. I mean, the USD CAD has weakened substantially since when was it?
Yeah.
When was the low here? It was at 2011 July. It's a lot weaker than it was. So I have to assume that yes, they want to stay behind the curve, having to do with what the rest of the central banks are doing. But at current levels, the Canadian dollar, I think they're fine with that. I mean, I don't think they really feel much of a pressure having to do with the levels of the currency, at least. Stelio, what else did we have?
That's actually it from me. I didn't have anything else to say.
Okay.
So take it away.
So the British saga, will continue, unfortunately. And let's see what we get from there. Coach, any requests from your side before we start?
What do you think about the possibility of the S&Ps rallying into the Fed? When's the Fed, Steve? I think, was it 13th or something like that?
Listen, one thing is for sure. We have information here that is, obvious to everybody.
Yeah.
I would have liked it to get resolved sooner to the downside for one more leg lower, but there is still the possibility for, a push higher, get people out of short positions and then lower. But I'm still quite comfortable with the bearish case scenario. I want to see lower prices before higher prices.
Okay.
From a technical perspective, at least. And don't forget that September as a month is a month that we have had many incidents of bad stock performance, right?
You mean into October lows kind of things?
Oh, yeah. Yeah.
Okay.
Yeah, absolutely.
Right.
Now, the major event yesterday, and I wrote that in the chat room when we were still above 99, Coach, is this huge reversal in the dollar. And the reason why this is significant for me, and I'm showing this again, is because this was a very nice confluence of very important trend lines. The more obvious one is this ascending channels trend line resistance, but the one that I haven't seen any other people paying attention to was this ascending purple trend line support that was supporting the uptrend until we finally broke below it in early June. And as you see, this was the third time that the market was backtesting this same trend line as support, as resistance, and we failed there once again. So I really have to like very much the reversal that we got. I mean, beautiful as a candlestick, because it was a very nice candlestick reversal. I mean, we were up on the day quite a lot, and we ended up closing at lows of the day negative, leaving behind a nice shooting star, and add to that the continuation that we're seeing so far today. Now, in combination, in combination with the area that we got this reversal, and if you want to add one more element here to the mix, we can also see that RSI was also diverging quite clearly, right? I have to like this reversal. Now, one comment here. I know that a lot of people, I want to stay, for a minute here with Stelios' help on the Euro USD. Now, I know that a lot of people are very, very bearish to Euro USD, and many people that I actually respect their, their point of views, their opinions, etc. But in all honesty, I fail to understand with the little brain I have. I fail to understand why people are so bearish the euro against the dollar. Just by having a look at both economies, there is some type of an uncertainty surrounding the Eurozone project and its future. I totally understand that. But the Eurozone is a net exporter. It also has the vast majority, if not all of the economies, having more or less sound economies having to do with how much they spend and their deficits currently. I mean, there are countries that have excessive debt, like Greece, like Italy, etc. But even Italy has a manageable deficit. So at least it's not expanding its debt, in a way that should draw attention. Now, Greece, on the other hand, has a 3.5% surplus. So it's actually paying back its debts. Of course, it's going to take decades and decades, but definitely, it does need money or loans to go forward. So the vast majority of the EU economies are going to perform much, much better under a recession than the US economy would. The US economy currently has something like 7 to 8% of real deficit, while we're still outside a recession. Now, the rule of thumb is that the difference in deficit between an economy while it's out of recession and when it goes into a recession is 4%. So the 7-8% deficit that the US currently has, of course, that's not the reported deficit, but if instead of the reported deficit, you take the amount of money needed to, fund the government every single year, which you can measure just by seeing how much the debt increased, shows us that that's the exact deficit. Okay, so now you add 4% to that, that's 11%. I have no idea if there is any other developed economy that's near that. Add to that the huge trade imbalances, and I have no idea why somebody would want to be. Oh, I forgot one thing to add to the mix. If we go into a recession within the next year, you can bet that the next US president is going to be, how do you call them there? Democratic socialists. Needless to say, what's that going to do to an economy, to any kind of an economy globally, right? So personally, I see, just by looking at the macro theme, I see very little risks for the Eurozone economy that are not priced in. Let me reiterate, that are not priced in, and huge risks for the US economy that the world is just currently ignoring. Stelio, I don't know, what's your input? Okay, he's not here. So regardless, that's my point of view. So yes, I would agree that from a technical perspective, if we do see a reversal and the move above, I would be, a little bit more lenient. I mean, I think 113 is the level to watch here. But if we do see a move above 113, especially considering extreme sentiment and positioning, I think that the Euro USD can move a lot higher than 99% of market participants expect. Okay. Of course, is that something that would make me go all in here? Absolutely not. Absolutely not. But I think above 113, the euro can really, really fly. Really fly. Now, I would say that the same would apply to the cable. If we do see a move above this purple descending trend line, you can see it here, which currently, let's say, passes roughly from 127. Of course, that's a long distance away. The first area of resistance to watch is the one we were testing earlier today. I mean, this blue descending channel. As you see, we tested it as a resistance once again. So far, we haven't moved past it. If we do, then 123.75, Blake said, 123.73 to be very exact, is an area to watch. If we go above that, I do think that then we can extend towards 128. And if we go above 128, it can really squeeze. The only difference here being that cable can really send people to the woodshed, because it can make an initial move and then, you know, seeing like some kind of an unexpected twist, an unexpected development, and, you know, everything out of the window. So, you know, from a personal perspective, I think that it is quite obvious that there are a lot more risks involved, and you should be a lot more careful with risk management if you're looking to, you know, to play the cable to the upside in comparison to the euro. Of course, there is a potential much bigger payday if you want to be long the cable and all works out correctly. And we get some kind of a deal, some kind of a resolution. It's better than what the market is currently pricing in. That's not hard, to be honest. Then yeah, there's going to be a much better payday. But on the other hand, you know, to have a potential better payday, you need to take a lot more risk, and that's the situation here with the cable. Now, Blake mentioned the Aussie moving higher, and I do agree there is some kind of a move happening here. But personally, as I've said, like, you know, weeks ago, unless I see the Aussie trading above 68.30, I'd rather stay away from it. 68.30 is a nice confluence of resistances. Previous low, support to resistance area, 38.2 from the last move lower. So 68.30, we break above it. Yes, I'm on board. I think that then we can easily extend towards 70 cents, 70.30, so another 200 pips, and we see what's happening from there. Okay. Now, having to do with the Kiwi, very, very nice reversal from confluence of supports. You can see here, this was the confluence of the 161.8% extension of this move higher and the 127% extension of this move higher. So they both, you know, confluenced roughly at 62.76 was one, and 62.90 was the other one. Like, so within 14 pips, we had these two. We tested that area. We're reversing from there. Would I be going out there like buying Kiwi? No questions asked. No, I wouldn't. As I said, the level I'm looking for the Aussie is 68.30. The equivalent level here for the Kiwi is 64.25, 64.30. You can call it. Okay. So yeah, it can definitely rebound there. But you know, what would I do with that if we get rejected from here? By the way, do we have Grega? Grega, are you here, mate? I see him writing on...
He's here.
I don't see him in the list.
Maybe he's an attendee.
Oh, okay. Let me promote him to panelist.
Yeah, promote Grega. He deserves it. For his great work. You are promoted to senior currency strategist, Grega.
Hey, mate.
How are you?
Okay.
You're promoted.
You were writing on Skype, and of course I cannot watch Skype while I'm doing a webinar, and nobody interrupted me to tell me that you're actually here.
Oh, I do.
We're talking so much that we don't have a chance.
How have you been, mate? How was the last days of vacations?
Last year of your vacation.
I mean, last year, vacation ended already more than a week back, but as you know, I had some other stuff to take care of it. So, but I'm fine, I'm settled, so ready for price action in September, which I think the volatility can come back ranges.
So, in one headline to start with, what do you think about the dollar's reversal yesterday?
As you know, I'm still looking for this ending diagonal. I just was very careful.
Grab the screen, Grega.
Grab the screen. Go ahead.
Yeah.
There you go.
Okay. So as you know, I was listening to you, and of course I agree that this very important trend line resistance has been tested for a few times, and I just think that there are a lot of traders who are optimistic about the dollars and just wanted to play this breakout on the long side. But looking at this price action, I would not be surprised if they are caught on the wrong side of this trend, because I still see this as a very good, valid ending diagonal with a over formation. We are now falling back into this wedge. So I'm just thinking about a potential weakness that may come in play this month. And of course, it's the same for the euro dollar. I also think that euro dollar is going to see a bounce. Now, if we take a look here on this daily chart, also you can see a very strong, sharp decline here. Okay, from February 2018, and then in this final part of this move, we are just still moving to the downside, but very slowly. A lot of overlaps, definitely.
Yeah, and momentum had waned.
Yes, definitely. If you want to level a 5-wave structure or an extended third wave within this 5-wave structure, then this should be an extended third leg, which means this is a 5th wave, because normally third waves are the sharpest waves in this 5-wave cycle. So
the question is, how do you think that things can unfold from here? I mean, are you expecting like a consolidation?
Yeah, well, look at his B up there. He's looking for a B wave up there.
Yes, I'm looking for a wave B. Now, as we know, these corrective rallies in 3 waves can retrace all the way up to wave 4 termination point, higher. But I would not be so optimistic, especially not on the euro. I would rather, if I would have to buy something against the US dollar, then probably I would be looking for Aussie or something. But as we are looking at the euro at the moment, I would not be surprised if we see the first retest of this upper resistance line, and then maybe even 14.11. But till the end of the year, I just think that this wave B could actually be ongoing. I don't expect nothing significant, because if we are stepping into a corrective phase after finishing this 5th wave down, then you may not get any excited or interesting moves at all, because this will be just another corrective B wave. Ending diagonals are very boring. Of course, the first part of this wave B can be very sharp, but then while it will unfold, it will form either a 3-wave correction or something even more complex.
Yeah, perhaps, but even if it's a 3-wave correction, we can have like a 5 waves up.
Yes, exactly. But firstly, I mean, from a trading perspective, I'm observing this reversal to confirm a low in place. You can see here on the hourly chart that there is a chance that we can already count this as an impulse. Maybe that was a wave 1, wave 2, and we are still going to see more upside here within this today's move.
Yeah.
So for short-term traders, watch out for a 3-wave setback and then expect at least one more push to the upside. So definitely would consider more gains after a minor setback. Okay, you mentioned Aussie as well, that it may go higher. I think that it has a very interesting reversal. Now we came down very close to this invalidation level, but we bounced from the lower side of this corrective channel. Also, this was a very deep and overlapping pullback, so still corrective personality. You can see here on the hourly chart, actually it's better shown, very sharp move and then very overlapping decline, and not below this level. And now this appears to be very similar to the first part of this reversal that occurred at the start of August. So I'm thinking that we are going to see a break above August highs and possibly even higher. And what I'm thinking is, because Hang Seng Index is now today made a very nice bounce, and it looks like that it may fill this gap that occurred at the start of August. Okay, so still there is room for more upside, which means that Aussie may also be supportive here.
Follow, yeah.
Also, I'm looking here at dollar against Chinese yuan. You can count 5 waves up here from end of March. Wave 1, 2, 5 subwaves within a wave 3, wave 4 pullback, and now you have 5 waves up in this wave 5. Maybe I'm wrong, maybe is this going to be wave 3, but still you would expect a pullback. So if that's going to be the case, then you know that Aussie will probably at least hold that low from August, or maybe even make a higher swing. Also, another thing is for Aussie is gold. Obviously, gold is still, in my opinion, bullish. I'm looking for a move up to 61.8%. And what is very important is probably this hourly chart, only 3 wave setback. We already tested the upper channel or resistance line. So in my opinion, this is correction. Either it's maybe already completed or it's going to be more complex, but the next leg should be above this high. So Aussie,
I really think, Gregor, you should start making alternative counts for a much larger move higher in gold. I really, from a fundamental perspective, I know you don't care about that.
Yes,
from a fundamental perspective, I really don't see how anything that is real and tangible with where we're headed from monetary policy perspective, how really any of these instruments can end up making new lows. Because I know that you were looking for new lows afterwards, right?
Yes, of course. I'm expecting a reversal after that. So, I mean, I also have to respect, of course, what the market is doing. I know that corrective waves, ABC waves, after this 5-wave drop can retrace all the way up to even 100%. Okay, but the first very important resistance is definitely going to be the 61.8, and also that's the area where wave C would be equal compared to wave A if we consider that was a triangle in a wave B. So I still think that this is a very important zone, at least that I should keep an eye on. I also will look for even more gains on dollar index after that pullback. Keep in mind that I said that I'm expecting only temporary bounce on euro dollar, okay, wave B, which means I'm expecting only temporary pullback on dollar index. So if dollar index will still continue higher while the euro dollar maybe can go all the way down to maybe even parity, that's when, again, gold may come under pressure.
Okay, silver has been overperforming gold, as you've seen. And any levels, specific levels that you're looking for silver?
Yes, on silver, I'm looking here for a flat. Maybe even this could be a triangle if we don't see a touch of this 2016 highs. But still, as I'm looking at this rectangle here, I know that it's a very strong explosive move to the upside, but may not be just may not be start of a bullish trend, especially if I'm correct with gold. Then we are here also in 3 waves move and could see limited upside around 21.
Okay.
What is important probably is here on this 4-hour chart up from start of June, it could be an impulse.
Yeah, I have the same channel drawn there that we overthrew.
Yes, but now the question is if we are going to hold those gains or we are going to reverse and fall back into the channel. If we fall back into the channel, I think this would be at least indication, at least for the short-term reversal.
Yeah, an exhaustion. Yeah.
Yeah. Now let me just look what I have here. Also,
a lot of people are perplexed with the USD yen, and somewhat correlated to that. I bet that everybody want to know your point of view and your opinion on risk. So S&P, for example.
Yes, I mean, dollar yen is not that good correlated to the S&P 500.
I know, that's why I said somewhat correlated.
Yes, and that's why we have some have issues to trade dollar yen this time, because you cannot really rely on those correlations. But looking at the dollar yen, I think that more downside can be coming. Looking at this complex correction, let me go to the 4-hour chart here. Now it's a very ugly chart actually.
It is
not even a triangle in a wave B. It's not a bullish triangle. Maybe it's a bearish triangle. But important is here on the 4-hour chart. Okay, on the 4-hour chart, what I see is, if I label it here, you would see that first recovery, okay, was in 3 waves. So in my opinion, this recovery is going to be corrective. So I would be expecting more weakness and ideally retest those end of 2018 spikes. Also,
Okay.
I'm expecting, looking at the S&P 500, I think this is probably a very important chart. The 4-hour chart. I'm looking, let me find the right one. Okay, here it is. Okay, I'm looking at this as a temporary corrective move. Why?
Me too.
Very simple, because it's a very
overlapping. Yeah.
Yes.
Why the first leg lower was clearly impulsive.
You mean this?
That one. Yes, that one.
Of course, I agree. And because it was very strong, so everyone who are looking just at Elliott wave cycle from simple perspective, just look for a very sharp and very slow moves. And if they are confused, if this is maybe reversal of into a new uptrend, well, just look at the timing of this current price.
Yeah.
The timing, I mean, it's a very, we are now here.
Yeah. Look how few days it took to move from the highs to that low.
It's 4 weeks now that we are unfolding or making a recovery for what?
61.8 roughly. Yeah. It took 4 weeks to retrace 61.8.
While this decline lasted for just what, 2 weeks or so. So in my opinion, I think that this represents correction, and we are having some very interesting levels up there. Let me just...
Yeah, I'm with you. I'm with you there. I'm not persuaded at all that we're going to see a new high from here. I think lower first.
Yes, and also there is, okay, I should look. Oh, something was wrong right now, I think. Wait. Just a second, 78.6. Okay, 78.6 comes in right at this wave C quality compared to the wave A.
Mm-hmm.
Also, very important chart for me is Nasdaq. Nasdaq has maybe a triangle here, while the S&P 500 can be formed into an ending diagonal in wave C. If that's really a triangle, then you know that we are going to see final push thrust out of this triangle before our reversal.
Yeah, and such a push higher is going to get everybody bullish at the worst possible area.
Because it was a triple top here, and of course they will want to play a breakout.
Yeah, everybody's going to be like, okay, we finished the period of consolidation. Now we're moving to all-time highs again.
Yes, and summer ranges are going to be broken, but we could very quickly fall back into these ranges later this month. Also, if we take a look on DAX, maybe that's even better structure. You have waves 1, 2, 3, 4, 5. Probably that's even clearer structure, the bearish one, than the S&P 500. We're looking from July highs. And now we are recovering in 3 waves. Now this could be very interesting for the short-term traders. What I see is that you can see here, I have 100% equality, which means wave C equals to wave A, right at this 61.8%.
We might move a little bit higher because...
quick look at crude, Grega, before the guest comes in.
The DAX also had...
for just a second.
You can see it, Grega. The DAX also had an inverted head and shoulders formation at the bottom. Its implied target is like at 12,200 or something. So we might first fulfill that target and then reverse.
Yes, okay, but what I'm looking at and when I would pay attention already at this zone is because I see prices already in a 5th wave here, and I see some gap.
Yeah, I see the gap as well, indeed.
So maybe we are going to finish this, maybe we are already in a 5th wave, so we just have to be aware of potential limited upside. Also, talking about crude oil, but of course, if we consider that the S&P 500 still has to make this final push up to complete this ending diagonal.
Perhaps the DAX makes it there as well.
Yes, of course, that's possible. Also looking at the crude oil, still nothing special here on the daily chart, but the shorter term price action is very interesting. We have seen a very nice clear 5-wave bounce, while the pullback after this 5th wave was in 3 waves.
Corrective.
The first leg. Yes.
Yeah.
So either wave B finished here, you would say, or maybe it's going to be more complex. And firstly, I thought that this is going to be a flat. It can also be a triangle, since we haven't fell beneath this August 26 level. So still very possible that we are in a triangle, but either case, I think that the next leg is going to be higher and going to be an impulse. Okay.
Yeah, I agree with you. But as I was saying the other day, I think that as long as we remain within that range, it's better to do nothing. I mean, rather better to play the breakout than anything else.
Yes, but if we're starting to play the breakout, then we may also consider that sooner or later this triangle may come to an end, because it would be at the final stages of wave E. Now, always when I'm looking at the crude oil to build confidence on this wave C to the upside, let's take a look on heating oil. Heating oil made also very nice rise and moved to very deeply here, probably
Great look.
61.8%. And you can see that this one is probably acting much better than crude oil itself.
Yeah, going into winter. Yeah, nice, Grega. Beautiful.
And then you have here Brent also confirming and looking the same, probably. I mean, this is definitely not an impulse, right? So, I mean, all three are looking quite similar. Always when I'm confused, same thing with gold. If I'm confused with gold, I don't know what it's doing, I may look at the silver, and maybe the silver will help me find the right look for gold as well.
Grega Horvat looking beneath the surface for clues and keying off cleaner formations to get a handle on what's going on. So that's great mentoring. You know, you don't have to know where everything's going. If you have one clear count, Greg, on something in a complex, you could extrapolate it out, right?
Yeah, exactly.
Man, it's great to have you back.
Thank you.
Nice to hear your voice, Grega. Thank you.
Yeah, Steve was crying a lot without you,
and
it's
counting a lot, probably.
it's great to have the team back at full strength.
Indeed.
All
Let's
right.
have a nice year. I'm pretty sure it's going to be a nice year, actually.
I'm positive.
Me too.
How about that? All right. So thank you, Grega. Steve, I'm going to bring our guest on now.
Absolutely.
Okay, Raksha. Great to have you back. I just promoted you. Let's look at if I have to unmute you.
Hello, everyone.
I can hear you.
Am I audible?
Hi, Raksha. I can hear you. So I'm not sure if you've been in Zoom before with us, but there's a green box that says share, and you click that, and you could grab the screen and take control of our television sets. Okay. There's a Zoom page you're showing now.
Okay.
Dollar.
Yep.
Dollar crude. All right. You know what? And I remember last time you were constructive, the crude oil market. So excellent place to start. Just want to let our community know that I respect Raksha's technical views. I've seen them be spot on more than once. So tell us what you're seeing in WTI here, Raksha.
First of all, hello everyone, and thank you so much for inviting me again, Dale.
Oh, you're very welcome. Turn up your volume.
Just a second. I think
there you go.
It's okay now?
Yeah, fantastic. Yeah. Okay.
So as in the crude, you can see right now it's in a no trade zone. I mean, like there's nothing going on much around since this week. This is the ranges which you can see, the dialog box, the boxes, the colored boxes. These are the support and resistance range which I have been plotting since like 2018, 19, and 16, 17, the major support and resistance zone. So here, what's happening is since June, it's trying to break the 2016, 17 support range, which also is 2014 low price that conference is about like $52. From there, it is being rejecting not once, twice, but many times, and now it's again going back to retest, what I feel to retest the levels of 2018-19 support range, this year's support range, which already been broken. Right now it's in consolidation mode. I am not into this trade at all. I'm just observing this. But yes, as last time I said, the trader's itch is going on right now. So I will be buying this above this immediate resistance, which has been recently broken. I'll just move down to the lower time frame. Yeah, which has recently been broken. And my very short term target would be
58,
at this level.
57.
Around 56,
yes.
56, around this level.
That's like a triangle line up there.
Yes,
okay.
It's going on in this range right now.
Let me ask you something. What's your technique for identifying major support, resistance, bands, levels? I know you have to look left, but is there anything that you do that might be different than most people looking at major support resistance levels? Is it just based on historical highs and lows, or how do you do it?
Actually, I've been incorporating volume based prices and everything, where which price the volume is the highest one, at which price people are interested in buying, and which price they are interested in selling, which is the price which they are not interested at all, like the indifferent price and all. So this range, like if I say it's 2018-19 support range, that means for the year 2018 and 19, it would be the lowest one. Okay, the lowest price range of that year, and the resistance would be the highest price range of the year. What happens is, mostly I go for a positional one. I don't go for the short-term trades. I go for the positional ones, like on a week or so, something like that. So I keep an eye on what the historical prices in the last year has been doing.
And do you incorporate the volume because that's where people are voting with their wallet? Is that why?
Exactly.
Okay. Volume, how do you find those stats, you personally? How do you get those stats on volume?
See, there's a volume profile also. I've been studying volume profile recently. So based on that, right now I'm going on the volume profile trading. And the earlier one, the pattern trades, which I usually do, plus the Fibonacci ratios and the important pivots of the support resistance pivots, which plays a very important role from the historical point of view, not like the recent pivots, on the higher time frame, like on weekly or a monthly basis, the major pivots. And one very important thing which I have been even written an article about that was, whenever there is a very big candle, like just for example, I'll just show you here, whenever there is a very big candle especially on a higher time frame, like this one, the 1st of August, if you can see this triangle.
Yes, got it.
What exactly happens is, the midline of this, the strong candle, the midway, the mean of this candle, it usually helps, it usually makes a good support and resistance level. Just like you see, the price rebounds almost like till the mid of this candle, and then it fell down. So I'm incorporating all the things in my studies. It's this the support and resistance range includes everything. The Fibonacci, if it is confluencing with the Fibonacci ratios, that is making that range is very prominent for me at that time. So as and when I see any good confluence of 2 and 3 studies of mine, that makes a good range for me, for a support range or a resistance range.
Thanks for sharing that.
And like in crude, as I said, I am right now, I'm just on a very short scalping thing. Gold recently, I've been following gold also. The gold is playing very beautifully right now at this resistance, this immediate resistance. It's been rejecting again and again. What I am seeing right now in gold is it might break this resistance for a very short target of around 1567 to 70 range, this range. And these levels are the historical pivots, important pivots, which earlier from where the prices reacted very abruptly.
When, in 2011, when it was coming down? From 2011, when we peaked at 1900, that ended up being an important support level that was broken? It's hard for you to go back that far unless you go to a weekly. But I was wondering how far back, because we haven't seen these numbers for such a long time. I was wondering how you came up with it. You probably had to go to your monthly chart to come up with it, or daily or something.
I'll just show you, because it would be little bit messy on a
Yeah.
higher time frame.
Not
but
to me.
I'll try to.
Yeah. Okay.
Okay. See, this again is the almost kind of a mid-range of this candle. So that is acting as a resistance level for me right now.
Okay.
Okay. And then this level, this is the volume-based level.
And that's where
I have
1570
calculated
about.
Yes, that is where 1570 about. It would
Okay.
be on the 2013 and 2014 years range. That would be in between that.
Okay.
And also see what I said was the confluences. See this, the high of 2nd of May 2011. This, see, the high is almost confluencing at the levels which I have
1570.
placed for which I have placed for the target, the possible target. If it breaks the resistance level, because right now I think it's exhausted a little bit, and dollar is also in support of this. DXY is falling, if you have seen, like here. So I think so. I'll show the dollar. It's on a different page. Yeah, here. DXY is falling from this level again, and it's going for the target, which this is an old chart. I'll just update the levels for this. 98.48. This is the place, I think by the end of this day the price might close near about this level. So this can add up of the break of resistance in gold.
So we pull back and the dollar make a and gold makes a new high, but then the dollar, you're expecting the dollar to hold around that 98.30 level?
Yes.
Okay.
Yes.
All right. Got it. Great jigsaw puzzle work.
Yeah, but let's as it is, there's no such momentum in gold right now. So right now I'm not betting anything on gold as of now. Only if this resistance range breaks, then I will be bullish for just a small target. That's it. Not more than that. I don't think so. Not more than that. It can sustain over that.
Okay, so I know it's projecting into the future, but let's assume we get through this resistance and head up to 1570 and stall. Are the numbers on the right where you think we could pull back to if that turns out to be a high?
Oh, okay. If 1570, if that would be the target, mostly I think from there it's going to reject the level and get back to the resistance level. Yeah. Mostly that's what I feel. But if it breaks up, then again, as I have marked here, 2012-13 support range, the lowest of this is 1594 around. I don't think so it will go till that point, but still, if it is the case, then my next target would be like that.
Where's that come in? The 2012-13 support?
2012-13, yes.
Where? It's 1600?
It's 1594-95 range.
Okay.
Mostly 1594.
Okay. All right. Great look. Anything else
but
for us?
I don't think so. I don't think so it will come till that point, but still, if it is going like that and keeping in view the the tensions going on right now and everything, if we can think about this, but no, I'm not that bullish. I'm not that bullish till the point. 1570 is the first point for me right now.
Okay. So is that it? Crude, Dixie, and gold? Anything else you wanted to share?
Been following Euro USD also.
Okay.
So Euro USD right now, what happened is it just abruptly rejected my level of the support resistance level. It rejected there, and now this monthly level. What monthly level is like? It's based on the last month's stats. Okay. So if I'm working right now on the September month, then I will be taking all the data and all the pivots and important Fibonacci ratios and all for the past level from August to September. So this monthly support, this level If the prices rejects this, then I'll be shorting this for the target of around 1.09632, this line around this.
Okay, so for a
Okay.
higher low.
Yes, this is the lowest of last month.
Okay.
This is the lowest pivot for the last month.
Okay.
So I will be going short for this. But if in any case it enters back into my last month's zone, then I will be bullish this for 1.1100.
Okay,
That would be my target.
111-ish.
Yep. 111.
Okay.
That would be my target.
So long term still negative, not expecting much more upside than 111.
Yes, not. I don't think so. It will be going more than that. If we put the fib ratio also, I think that won't be, as it's almost similar making an ABCD pattern. Just not exactly, but similar. Like this is 50% retracement. It comes near 1.10878. Max to max 61.8 retracement. That's it. Not more than that. I don't think so. It will go far any further than that.
Okay, 112.60.
Yes, 112.60 and 1.10878. So these are the two levels, because it is in a downside zone, right?
Right.
It's okay. So after that, it will again fall back, and then it can change some trend here, because it's been going in between the ranges. This the support and resistance range of last year and support and resistance of the recent year. So it's going in between that range. So right now in the short term view, I am bullish only if it comes back within my last month's range, which will be targeting on 1.11 and max to max 1.11260.
What a great presentation. I mean, you accomplished a lot clearly in a very short period of time.
Thank you so much, Rio, for that.
You know, really great to have you back. Why don't you show the audience where they could find you? You know, we could, your Raksha's Twitter handle is at RAKZ, like zebra, _27. Why did you pick 27? That's your permanent age?
It's my date of birth.
Huh? Your date of birth?
Yeah.
Oh, mine too.
That's it. Oh, wow. So
May
we share
27th.
another. It's August 27.
Okay, I'm a schizophrenic Gemini. So do you want to show your website now, or
Yeah, sure.
that's also a place where you could follow Raksha's work?
Yeah, sure. It's niftyanalysis.in.
Okay.
Yeah, and we have started a live chat sessions also for where what exactly is like the like-minded traders. We just come together and then we just share where the market is going, what would be the trade possibilities, and all sort of things. This is a live chat session. Just
Isn't it
clicking
fun?
on here, it is a lot of fun, and you can learn from the fellow traders. Very importantly, mostly
Yes.
the thing is that people who are interested in trading for the intraday sessions and all, they come and join us and we share our views to them. Mostly that thing happens, but other way around, you know, when there are so many people, so many brains in one place, you tend to learn so many things from them also.
Okay. Big believer in that we only have two eyes, each of us, and the power of masterminding. So I really appreciate you joining us. Go ahead.
In a very short time, if anyone is interested in Indian Bank Nifty and all, just one point for them: if anyone is following the Indian stock index of Bank Nifty and Bank Nifty,
yeah,
it is at the bullish invalidation level. Okay, it has rejected twice here. What I feel is it might rebound to some level, but still not more than the target, which I have 27873, near about this level. If anyone is interested in that, just for that sake, I'm just taking a little bit more of your time. In Bank Nifty, I am a little bit bullish about this on the and right now lot of thing is going on in Indian economy about after budget. the prices has been like going down and down and down, and people, there is a lot of chaos, and people, like, it's a greed and fear mixed together, like it's going to go up, it's going to go down. So only one thing I want to tell anyone, just don't go for the individual targets which people are giving. Just stay calm right now. It is still not in any trade zone. So please just relax a little bit for this month, at least, for any kind of trade entries in Nifty and Bank Nifty. Bank Nifty is also having the same thing, but in Bank Nifty, a little bit thing is I'm a little bit bearish in the Bank Nifty, in Nifty. I think it's going to go down till 10609 level to 10490 level. So just sit back and relax for both of these indexes. That's it.
Any view on the geo tensions between India and Pakistan? What do you think? I mean, it's been going on
right now.
It's been going on for hundreds of years. Anything different about what's happening in Kashmir this time that you sense?
What different? What I think this time, actually, rather than talk, something practical has been happening right now. Some practical steps has been taken. A lot of tensions because of this. Lot of tensions has been going on, and also in the UK. Also recently, there has been some violence at the Indian High Commission office of London because of this Kashmir issue. So let's see. I can't comment on that exactly what is about to happen, but what I personally feel is at least there are some steps taken on a practical level rather than just in the round conference level, that might help to curb the terrorism which is going on right now in every place of this world. So I think so. It's a good step. Let's see what is going to happen in the next coming days, because some written petitions are also on the validity of the step which has been taken by the government. And a lot of, but if I've been following the news also that many countries are supporting India for this decision, rather than Pakistan making all the things that that the step which has been taken is wrong and all. Personally, I won't comment anything about this because it's a very sensitive issue right now.
Yes.
But I feel some practical steps has been taken for a betterment of this world. I feel so.
Okay.
Because terrorism, it's a sick thing. No one wants that.
Okay, Cheryl, Raksha's Twitter handle is @RAKZ like zebra _27. Thank you so much, my trading warrior sister. And
thank you so much, Dale, for
it's
inviting me again and again. And it's like a second home to me right now.
Well, you know what? Thank you for coming and edifying our community every time you're here, Raksha. And regarding what's happening in India and Pakistan, praying for peace and that things get worked out, because that would be a black swan that no one's even thinking about. So appreciate your work and your talent, and may you have a great fall trading season and your community grow like a mushroom.
Thank you so much. Thank you so much. And I've been loving your tweets about God. Just in an extra thing, I wanted to tell you that it's very beautiful.
Thank you so much, Raksha. So that's going to be a wrap, everyone. Remember, don't just count your pips, count your blessings, and we'll be back tomorrow for investing.com Thursday. So good hunting the rest of the day, and thank you again, Raksha.
Goodbye. Take care.
Bye-bye.